A very interesting report came through, actually, from the management consultancy eocnomy today about where the big global retailers are beginning to invest, or where, in the main, they are investing. You might assume that it would be China that's number one. In fact, it isn't. To tell us more about the Global Retail Development Index is Fadi Farra, the principal author of the report from eocnomy. So what actually does this report set out to do?
Well, this study is less about which market is attractive, but more about when you should enter in which markets.
When?
Absolutely.
Right.
It's about the timing. And this year, the main outcome is that India is number one. And India is number one for a few reasons. First of all, in terms of the basics, it's the second population in the world, the third strongest economy in Asia. But most importantly, it's a market which is still untapped. The top five retailers in India account to less than 2% of the markets. The size of the prize is fairly large. It's a market of about $300 billion, which is expected to grow to about $600 billion over the next 5 years. So in a nutshell, it's a fairly untapped market, and for retailers that may have missed the boat in China, it's an opportunity to enter in that market.
So I've misunderstood. This is not. I had assumed that this was gauging who is investing and where, but you're actually saying no. You're actually coming to a value judgment about when.
Exactly. It's basically looking at 25 different dimensions, macroeconomic, retail specific,
right.
And from an external perspective, judging when should one enter in which markets. And today we have India number one, we have Russia number two, and the Ukraine market, interestingly enough, is coming as number three, highlighting opportunities towards the Eastern Europe.
Ukraine. So basically, the investment is moving eastwards. As you see,
absolutely.
We've had this whole convergence play with the bond market, equity market, so on and so forth, and basically you're saying the retailers tracking that further and further east.
In Asia, the opportunity is moving more to the south, so it's India, Pakistan.
Right. In
Eastern Europe, absolutely, is moving more to the east of that market. The Russian market is now very attractive from a retail perspective.
Ukraine. Why is that?
Well, it's the largest food market in Europe. The population of 184 million people makes it a fairly large size in terms of the market. Secondly, it's a market which has been growing fairly quickly. The GDP per capita has been increasing fairly quickly. Retail has been increasing fairly quickly over the past few years. But probably most importantly, it's one of the rare markets where you have 13 cities with more than 1 million people. So for retailers to open shop, it's a fairly attractive market.
But it's quite spread out, though, isn't it?
Absolutely.
I mean, so your transmission is going to be quite costly.
These retailers that have entered in Russia have usually pockets which are quite deep, because the supply chain costs are important.
Just finally, but before we have to leave it, talk to me about this trade-off between China and India, or the comparison between the two.
Sure. Well, India is probably what China was about 15 years ago. But today, the Chinese market is, the saturation level is fairly high. You have more than 30 global retailers in China today. That is not the case in India. You have a population which is going to overtake, India is going to overtake China over the next 20 years. So longer term, probably India will make more sense for retailers.
Thank you for explaining that, Fadi. Nice to see you. Fadi Farra, who's the principal author of this report from eocnomy, the management consultants.